Airbnb has been a company that I've been contemplating purchasing for a while now. I really love the business model of not actually owning anything, such as Airbnb or Uber, and basically just allowing people to run their own Airbnbs, run their own products, and you are servicing them. The good thing about it is that there's a lot of room to grow, and also the overhead is still high, but at the end of the day, like, you're not actually purchasing these places, you're not actually running a hotel business, you're a software business. And they just came out with earnings yesterday. I want to go over the numbers. The stock is sitting flat right now, but this could be at a pretty solid valuation. I haven't looked at the financials of the company in a while. I haven't actually done a deep dive on the company in a while, and I want to do it live right now for you guys so you can get a better understanding of what I'm looking for. Hit the like button, subscribe, check out our Discord community down below. The link is in the description. You guys get access to free courses, free live streams, free seminars, free webinars, free trades. All of my long-term investments are over there within the long-term investment section, and I give away 2 free trades a week. This week was a $1,000 profit on BBBY, and a $400 profit on XOP was last week's. Let's get into the numbers. So revenue is up 58% year over year to 2.1 billion. Revenue growth year over year, that's a really good number, but you have to remember off the top of my head, their revenue plummeted during the Roni. Airbnb reported net income of $379 million, up from a loss of $68 million a year ago. Very good. Like, that is very, very good. When you look at growth, right? Massive growth at 58% return over a year. And then also just like they're keeping their net income way better than it was before. That's super solid. If you look at a video we just did on SoFi, like right before this video or yesterday, I don't know when I'm releasing these videos, SoFi has insane growth, but they're burning through capital, something that Airbnb is using their capital better, and they're watching it over more. Company also announced a $2 billion stock buyback program, so they believe the stock is cheap, guys. Believe the stock is cheap if they're going to be doing a buyback program. So earnings per share 56 cents versus 43 cents. Revenue 2.10 versus 2.11, so they just, basically like missed a little bit there, or hit it. Airbnb, unlike Uber, benefited from an increase in consumer spending on activities as opposed to goods. Revenue jumped 58%. Solid numbers. Looking at those, really, really happy with those numbers. This is a stock that has been very volatile, much like the market as a whole. 52-week high was 212, 52-week low was 89. Market cap 73 billion, so definitely not a small company, but not massive. Revenue trailing 12 months is 6 billion. Net income is 801 million. Great number. PE is sitting here at 91. This is disgustingly high. Profit margins are 12%. But here's the deal. Profit margins are 12%. They're growing very quickly. But the good thing is that I think that number can be probably this time next year. I don't know how the economy is going to be, but I think that number can be worked on in the next 5-10 years drastically, up to like 20-25%. Price to sales is at 11, and return on assets and return on cash is pretty good too. So not bad. I mean, the biggest piece that I'm always looking at here is that the company is just very volatile because they have not proved profitability for a very long time. Now, these numbers have not updated yet, but one thing to look at is revenue. 4 billion in 2021, 6 billion in 2022. Very solid. Net income, like we said before, I just want you to realize how much cash they were burning. Net income for 2021 on $4 billion, they lost $5 billion. So they did $4 billion in revenue and lost $5 billion. This year they did $6 billion in revenue and made $800 million. Good to them. Round of applause for Airbnb. It's very good. Not bad at all. Now looking at the balance sheet, and they're growing. That's massive too. This is obviously going to be a massive growth company. Looking at the balance sheet now, you guys might not be able to see because my big head is in the way. But total assets is $17 billion. Total liabilities is $12 billion. So they can cut a check tomorrow, pay off all of their debt, which is something that I love to see. And if we go through and take a look at the stock analyzer tool, this is going to be really kind of hard to get accurate numbers, but I'm going to be very conservative. So please remember that. Even the high side is going to be relatively conservative. So if we're looking at the next 10 years, which is what I'm doing, 10 years of analysis, I would maybe even say we could do 5. Right? Maybe we'll do 5. Now we'll do 10. Let's just look at 10 years of analysis, right? Revenue growth last year is 57%. So 10 years, let's say the company can do 15%, because they're still small, right? As the company grows, revenue or growth is going to drop, but they're really young still. So let's say they do 15%, 20%, 25%. Profit margin is at 12. Let's say the low side is 8%. Let's do 10, 15, 10, 15, 20. I think they'll work that number out. Free cash flow, let's do 25. I don't want to do 25, 35, 45. I think that's too much. 20, 25, 30. PE, let's do 25, 30. Nah, let's go a little more conservative. I always say this. We need to stick to what I would say. 20, 25, 30. And same thing for PFC or PFCF. 20, 25, 30, 15, 15, 15. Let's run the numbers. So looking at Airbnb, if you believe everything on the right side is going to happen here, then anything under $117 is a buy. Now, I will say the company is small. Those are a bit aggressive, but I think that can happen, to be quite honest. I think that can happen pretty damn easily. So anything under 177. What I really want is under 80. I think that they can easily do these numbers pretty easy. I think they can easily have revenue growth at 20%. I think they can easily get margins at 15%. They just have to raise it 3. I think they can easily get free cash flow at 25. It's at 41 right now. It's not going to stay that way. PE at 25 and P/FCF free cash flow, same thing. I think this is a solid company. I really do. I think it's a solid company. I'm going to add it to my watch list. I don't want to buy it right now, but for me, I want to add it to the watch list. I think it's a good deal if we can get back down to that range. And, you know, if you look at it, we were trading at 91. I should have just started a position there, guys. I wasn't paying attention. I would have started buying at 91. So I think it's a great company. I'll be investing. I just hope it drops a little more. Maybe I'll start selling cash secure puts on it. We'll see. Thanks for all the support, guys. Have a great day. Peace.